My name's Crandall. I'm actually the CEO of Credit Suite. And at Credit Suite, what we do is we help businesses get capital. And we really do it three different ways. We do it by improving a business's fundability. These are kind of the little things that people don't know about that lenders and credit issuers look at to determine if you should be approved or not approved. So we make sure the fundability is improved to a point where you can get approved. And then we help businesses build business credit, their EIN that's not linked to their personal Social Security, credit that doesn't require a personal guarantee or credit check to separate personal and business liability. And then we also help with accessing all different kinds of business financing in one place by combining, funding from fintech companies to big banks like SBA to make it really accessible for small business owners. There's similarities and there's also a lot of differences. The similarities is that the way credit operates, you could build a credit profile for your EIN number the same as you could build a credit profile personally that's linked to your Social Security number. And conceptually, it starts the same. You start with no credit profile, you get credit that reports to the reporting agencies that establishes a credit profile and score. And the more credit you use, the more credit that's reporting, the higher your limits get and the more types of financing that come available based on that credit profile and score. A lot of differences as well. The business credit reporting agencies are Dun & Bradstreet. They're the biggest in the space. And then Experian and Equifax. And Experian and Equifax are common in the consumer world. TransUnion's common in the consumer world, but not in the business world. And Dun & Bradstreet's really not relevant in the consumer credit world. So the reporting agencies are different. The scores are different as well. Business credit scores are very fast and easy to build because they're based on how you pay your bills, your payment history. And the consumer credit score is based, typically driven by the FICO score. And there's 5 components like how long you've had credit, utilization, amount of new credit you're applying for, credit mix, payment history. So there's a lot of factors that affect that. So very fast and easy to get a good business credit score. So all I do is get credit that reports and pay those bills as agreed. The limits on business credit accounts are about 10 to 100 times higher than consumer. So if you're used to a $1,000 limit credit card that you usually get at stores, you're going to be at $10,000 plus in the business world. Makes sense. Businesses have a much greater appetite for spending than consumer. And then, of course, the credit that's on the business credit reports, typically you're not liable for personally. So there's no personal liability. There's no personal credit checks. There's no inquiries on the personal credit report when you're building business credit for the sake of the business that reports in your commercial credit report. So some similarities and some differences as well. Well, I think it depends on the purpose. So let's look right now. A lot of people need money right now to shift in the economy. So if you got credit lines, you're prepared for this. You already had credit that you could tap into and use when you need to use it. And the benefit of credit lines is the flexibility. I could get a credit line. I could put $50,000 on it. I could pay the $50,000 off. I could reuse that $50,000. So the nice thing is I'm not paying interest. I'm not paying payments on money that I'm not actively using. The minute I get it a loan, I'm paying interest and I'm paying payments on that actual loan. So I really need to be sure that I'm going to get the loan and then immediately deploy those funds to get some kind of rate of return. Whereas credit lines are great just to have laying around to use to take advantage of opportunities because I can get all the credit lines I need. It doesn't cost me anything until I actually use them. So I think the main thing is just the flexibility, whereas credit lines, you could use them and reuse them and only pay on what you're borrowing as you borrow it. And a loan, the minute you take that loan out, your payments start and you need to be able to deploy those funds to actually start getting a return. Well, there's a lot of things that we've done. We use our credit lines pretty readily to take advantage of all kinds of opportunities, whether it be acquisitions, whether it be to, deploy new marketing strategies. So for example, right now is a great time. Ad spend is down anywhere between 30 to 70% from what we've seen in major ad platforms. So, this is a great time for us to use our credit lines to even actually deploy more funding and to increase our ad spend, which is where we are. We're going to do more. We're going to generate more leads right now while we have the ability to do so. So there's just so many different growth strategies, but that's one of the examples of how we use it. It'll be interesting to see. When we had the mortgage crisis in 2008, we had Dodd-Frank, and Dodd-Frank really changed how the landscape worked, and banks tightened up by about 15% on the kind of credit that they were issuing. So it's going to be interesting to see, what's going on with coronavirus and if that'll have any impact on the markets. But one of the first things that the government did was they came in and started buying up all kinds of commercial paper. So this still allowed banks the liquidity to still issue loans, to still issue credit. at the rate they typically were. And that's what we've seen. So currently we've seen that even in a whole new economy, that lenders are still issuing, that credit issuers are still issuing credit much the same as they always have. When the 2008 mortgage crisis occurred, and banks pulled back, all kinds of alternative lenders poured into the space. And it really changed the entire landscape of lending as we know it, to a point now where 90% of funding comes from alternative lenders. And these alternative lenders has made it a lot easier to get money. You don't need to have good credit and cash flow and collateral. Like if you have some kind of lendable strength, you can get money, versus everything being pristine, personal and business, which is oftentimes required with SBA loans. So it'll be interesting with this new landscape to see how things change. But in the short term, we're seeing that money is readily available from the government through SBA in ways we've never seen. The money can be forgiven. Payments can be forgiven for 6 months. I mean, there's all kinds of grants and free money being handed out to small businesses. So I think for 2020, we're going to see a lot of that. I think we're going to see a lot of lending from the SBA. I think we're going to see a lot from this $2 trillion package that they just released not too long ago, last week when we're recording this. And also, I think that we're also going to see another bill. I think we'll see more money that's put into the system as well. So I think 2020, you're going to see government lending or lending that comes from the government that's backed by SBA at an all-time high than we've ever seen before. And then I think that you'll see that slow down into 2021. And it'll be interesting to see how that changes the landscape of other lenders coming into the space, new kinds of programs. Time will tell. I think the biggest mistakes I see people make is they don't do it till they need it, and like much the same as, I see a lot of people in the consumer world that have credit issues, don't address those and say they don't need their consumer credit. Then they need a home loan or they need a car loan, and then they do need it. And then they have to fix it, and it delays, 6 months to 2 years, their ability to go get those loans. It's the same thing in the business world. Those people that have like kind of heeded those warnings and built business credit, they're in a really good spot right now. They have very high limit accounts at most major retailers like Amazon and Walmart. They have an established business credit profile and score that they can go get an SBA loan. You can't get an SBA loan if you don't have acceptable credit, which means you can't even get an SBA loan without established business credit. So their ability to come in and tap into the loans and credit lines that are out there is fairly easy to do. They can use that established credit profile to do that. But business owners that haven't yet done that are behind the 8 ball. They're literally trying to apply for emergency disaster loans and then build the business credit before their loan is even underwritten, so they have the credit they need to qualify. So we've really seen, especially when the economy shifts, that you need to be prepared. And so the best thing I can ever say is go through and make sure your fundability is set up, your business name, your address, your phone number, your website, your email address, all those kind of things. Make sure that they reflect that you're lendable. Start building your business credit profile and score now. It opens up all kinds of liquidity for you, where it gives you the ability to get these high limit accounts in your business name that are not linked to you personally. And it makes it much easier to get loans and credit lines when you really need them by establishing that business credit profile and score. Same thing with credit lines. If you can get credit lines before you need them. There's just nothing wrong with having 50, 100, 250, 500,000 plus in available credit, where if the economy shifts or anything shifts in your business, you immediately can use those funds to kind of carry yourself through as you make the adjustments. So just get the money before you actually need it. Build your business credit before you need it. It just becomes much easier, especially when you're in a pinch, to access the capital that you need. We've got a great guide at creditsuite.com/EIN. And if they go to creditsuite.com/EIN, there's a step-by-step guide to build business credit. This guide's been downloaded over 1 million times. It really maps out everything you need to do to be able to start building a business credit profile and score for your business. And if you visit creditsuite.com, at the top right are all of our social media channels. So you could, listen to us on iTunes on the go. We've got 300 plus episodes on our podcast now, hundreds of videos on YouTube. We're releasing tips daily on Instagram, Facebook, Twitter. We go live on all those channels. And we always have very up-to-date information with how to get capital for your business, regardless of where we are in the economy. We're talking about the money that you can get right now.